Berkshire Hathaway shareholders flocked to Omaha, Nebraska over the weekend to hear from legendary investor Warren Buffett and his sidekick Charlie Munger, as well as other company executives. It was the conglomerate's first in-person meeting since 2019, and tens of thousands of shareholders came to hear what the company's 91-year-old chairman and CEO had to say about business, the economy, and investing. Berkshire's vast business touches many different areas of the economy, including insurance, retailing, manufacturing, energy, and more, making it a good gauge of the current economic landscape. Here are the key lessons for investors from the 2022 Berkshire Hathaway annual meeting, known as Woodstock for Capitalists. It's never a bad idea to follow advice from Warren Buffett. The billionaire investor, nicknamed the Oracle of Omaha, has a wealth of knowledge and advice out there for people willing to listen. His annual meetings and shareholder letters offer significant insight into how best to approach investing based on market conditions. Here are the key lessons for investors from the 2022 Berkshire Hathaway annual meeting, known as Woodstock for Capitalists. So before going deeper into the video, make sure to subscribe to our channel and press the bell icon for more videos. So let's get started. Number 1. Make sure your portfolio is built to survive. Berkshire is known for holding a large amount of cash on its balance sheet, and some have criticized Buffett for not being more aggressive in making investments with that cash. But he highlighted the importance of holding enough cash to ensure that the company can always survive, especially during market panics similar to the financial crisis of 2007-2009. "We will always have a lot of cash on hand," Buffett said. "There have been a few times in history, and there will be more times in history, where if you don't have it, you don't get to play the next day." Number 2. Focus on value, not on timing the market. Buffett reminded shareholders that he never knows what the stock market is going to do in the short term, which is why attempting to time the market is a poor investment strategy. Investors who think they can jump in and out of the market at all the right times are extremely unlikely to be successful. "We have not been good at timing," Buffett said. "We've been reasonably good at figuring out when we were getting enough for our money." Buffett pointed out that they were too early in deploying funds during the 2008 financial crisis and said he totally missed the opportunity in March of 2020. Number 3. Owning productive assets is the way to go. Investors have lots of choices when it comes to where they put their money. Buffett again made his preference clear: assets that produce value for their owners. There are many investments that fall into this category, including stocks, bonds, real estate properties, farmland, and more. Recently, cryptocurrencies have burst onto the investment scene and attracted a lot of interest from traders and the media, but Buffett made it clear that he's no fan. "If you told me you owned all of the Bitcoin in the world, and you offered it to me for $1.25, I wouldn't take it because what would I do with it?" Buffett said. Number 4. Steer clear of Bitcoin and other cryptocurrencies. Buffett and Munger both made clear that their opinions on Bitcoin and cryptocurrencies have not changed since they first started warning investors about their dangers. Buffett called Bitcoin a mirage in 2014, but 98-year-old Munger took it a step further at this year's meeting. "In my life, I try and avoid things that are stupid and evil and make me look bad in comparison with somebody else, and Bitcoin does all three," Munger said. Munger, who is known for his strong opinions, said Bitcoin is stupid because it's very likely to go to zero, and it's evil because it undermines the Federal Reserve and the national currency system. Finally, he said it makes the U.S. look bad in comparison to China because the communist country was smart to ban cryptocurrency altogether last year. Number 5. Avoid the speculative nature of the stock market. The stock market has always been a combination of legitimate investment activity and more casino-like speculation, Buffett said, but the past couple of years have leaned more toward the speculative side. It's a gambling parlor, Buffett told shareholders, adding that Wall Street had contributed to the casino mentality. They don't make money unless people do things, and they make a lot more money when people are gambling than when they're investing. It's almost a mania of speculation that we now have, Munger said. We've got people that know nothing about stocks being advised by stockbrokers who know even less. Number 6. Your skills can't be taken away by inflation. With inflation at its highest level in 40 years, shareholders were wondering how to protect themselves from losing purchasing power as prices climb higher. The best thing you can do is to be exceptionally good at something, Buffett said. Whatever abilities you have can't be taken away from you. They can't actually be inflated away from you. Number 7. Short-term government bond funds. Government bond funds are mutual funds, or ETF, that invest in debt securities issued by the U.S. government and its agencies. Like short-term CD, short-term government bond funds don't expose you to much risk when interest rates rise, as they've done to start 2022. The funds invest in U.S. government debt and mortgage-backed securities issued by government-sponsored enterprises, such as Fannie Mae and Freddie Mac. These government bond funds are well-suited for the low-risk investor. These funds can also be a good choice for beginning investors and those looking for cash flow. Number 8. Cryptocurrency. Cryptocurrency is a kind of digital electronic-only currency that is intended to act as a medium of exchange. It has become a hot property in the last few years in particular, as dollars flew into the asset, pushing up prices and drawing even more traders to the action. Bitcoin is the most widely available cryptocurrency, and its price fluctuates a lot, attracting many traders. For example, from a price below $10,000 a coin at the start of 2020, Bitcoin soared to around $30,000 at the start of 2021. Then it doubled above the $60,000 mark, before falling back significantly in 2022. Number 9. Dividend stock funds. Even your stock market investments can become a little safer with stocks that pay dividends. Dividends are portions of a company's profit that can be paid out to shareholders, usually on a quarterly basis. With a dividend stock, not only can you gain on your investment through long-term market appreciation, you'll also earn cash in the short term. Buying individual stocks, whether they pay dividends or not, is better suited for intermediate and advanced investors. But you can buy a group of them in a stock fund and reduce your risk. So that's it for today's video. I hope you like this video. If you really want to, then don't forget to subscribe to our channel and hit the bell icon for more videos. Thanks for watching and have a wonderful day.